Hey everyone, welcome back to Jiba Crypto. Let me ask you this. Have you ever wanted to buy crypto but felt overwhelmed by wallets, exchange and seed phrases? Today, I'll break it all down, simple and clear. Buying crypto sometimes sounds complicated, but it doesn't have to be. So we'll talk about the difference between centralized exchange, decentralized exchange, how to keep your coins safe with wallets and seed phrase, and even how to get exposure through ETFs if you don't want the hassle of self-custody. First, the most common way, centralized exchange. These are platforms like Coinbase, Binance, Kraken or Bybit. You create an account, deposit money by transfer or card, and buy crypto directly into the platform. Simple and user-friendly. But there is one catch. On a CEX, the exchange holds your crypto for you. They control the private keys, not you. Which means, if the exchange gets hacked or shuts down, you could lose access to your coins. Next, Decentralized Exchange or DEX. These are platforms like Uniswap, PancakeSwap, Aerodrome, Jupiter or Hyperliquid. No signups, no bank cards. You connect your own wallet and trade peer-to-peer. The big advantage, you stay in control of your coins, but the downside, they're harder for beginners, and you need to already have some crypto to start trading. This brings us to an important topic, custody. When your coins are in a centralized exchange, they're not really yours. The exchange controls them. As we say, not your keys, not your coins. With self-custody, you hold your own private keys, and that means through ownership. But it also means you are fully responsible for security. So, how do you self-custody? You need a wallet. There are two main types, hot and cold wallets. Hot wallets are apps like MetaMask, Phantom, Backpack, or Sui wallet. They're connected to the internet, easy to use, but more exposed to hacks. Cold wallets are hardware devices like Ledger or Trezor. They store the keys offline, making them much more secure, but a bit less convenient. Now, here's the most important part of self-custody, the seed phrase. When you create a wallet, you get a public address. It's just like your bank account number. You can share it so people can send you crypto. And a private key, seed phrase. It's like your master password for your money. Whoever has it controls your funds. Most wallets generate a password as a 12 or 24 word seed phrase. This phrase can restore your wallet on any device. So if you lose your ledger or your phone, but you still have your seed phrase, you can recover your funds. But if someone else gets your seed phrase, they can steal everything from any device. This is why security is everything in crypto self-custody. Some people write the seed phrase on a piece of paper. Others are afraid of the paper gets damaged and they engrave it on a metal plate which is resistant to fire or water. But one universal rule, never store your seed phrase on your computer or online. There are viruses and hackers scanning for those files all the time. If they get access, they can empty your wallet in seconds. So self-custody gives you full freedom. But with full freedom comes full responsibility. But there is one thing. If you're coming from traditional finance and self-custody, hot wallet, cold wallet, seed phrase is overwhelming, there is now a much easier option for you, ETFs. Crypto ETFs allow you to buy Bitcoin, Ethereum, or even a basket of altcoins, just like you buy a stock or an index fund. So if you don't want to worry about private keys, seed phrase, or moving coins around, ETFs are a simple way to get exposure to the crypto market without leaving the traditional financial system. You can buy them from your brokerage account. So here's a simple example. A beginner might buy their first Bitcoin on Binance. Transfer it to a hot wallet for small transactions. Move larger amounts to a cold wallet for long-term security. Or if they prefer not to manage wallets at all, they just buy crypto ETF and track the market through their own brokerage account. In short, centralized exchange, easy but less control. Decentralized exchange, full control but more complex. Hot wallets, convenience. Cold wallets, maximum security. Seed phrase, it's your ultimate key, and ETFs, the easiest way for traditional investors. If you want to invest in crypto, you need to understand these basics. So which option would you choose right now? Centralized, decentralized, your own wallet, or ETF? Let me know if you have any questions about crypto, commenting below. And please, don't forget to subscribe to Jiba Crypto for more insights. Stay smart, stay ahead.